Everybody, today is Saturday, the 10th of September, and we had a good week in the market finally here. And the way it happened was really educational. Let's take a look at the S&P 500. If you follow me on Twitter, you saw it unfolding in advance. And if you're not following me on Twitter, again, that's where you see a lot of my work. A couple weeks ago, as the market broke below, this is the S&P 500 on a 15-minute time frame. As the market broke below that 5-day moving average, that's where we turned bearish because the market made lower highs and lower lows below the declining 5-day moving average. We didn't turn bearish at the peak, but a couple days later. And we were bearish this entire time because the 5-day moving average was declining. Even though we were above it on a couple of instances, it wasn't until about Wednesday of this week where I started pointing out that the 5-day moving average had the potential to flatten out, and if we could hold above that and then make a higher high, that's where we enter a stage 2 uptrend. So again, when we look at stage analysis, we're innocent until proven guilty above a rising 5-day moving average. We get cautious over here as it starts to flatten out, but it didn't break down, so we didn't get bearish. The market rallied, stage 2 continued. We really didn't see a stage 3 distribution. It went straight to stage 4, stage 1 accumulation, and now the stage 2 uptrend that we're in. So as we add pieces to the puzzle, that is when we look at, again, this 15-minute time frame on a different chart over here, what we'll see is we've been looking at these volume-weighted average price levels. First anchored to the high last month, and then we anchored one to the Chairman Powell's speech at Jackson Hole. The market rallied up to that Chairman Powell's speech, VWAP right here, came down, hit it again, and then on Thursday morning held above the month-to-date volume-weighted average price and the 5-day moving averages. Those flattened out. Again, I had put a couple videos this week on Twitter explaining that it's looking like it's getting bullish and had the potential to rally a first upside level of interest, not a price target and not a level that we call resistance until it's backed away from there. And that's exactly where we are right now. So when you look at the daily time frame, let's just do this. Let's clear this up a little bit. If we take a look at the volume-weighted average price off of that August peak, you can see it's right here. And that's also the March 29th peak. So we have the volume-weighted average price, in other words, anchored from March and August, and they both come together right here. We have a declining 20-day moving average. So this is a level where we would be looking for the potential of resistance. But when we look at the 15-minute time frame, even down to a 2-minute time frame, you can see there's no resistance at all. The buyers maintained control. This is Friday's trading all day long. So short term, it's innocent till proven guilty. We're at a level of basically, caution. But there's nothing here that says the market can't continue to move higher. We're not here to predict what's going to happen and make decisions based around that. We want to anticipate and then participate as we get the confirmation of our thesis, and then manage risk. So the bias here right now is to the long side and protect your gains. If you bought, let's say, over in here and you let it go all the way back down and lose money, you're not really a trader. You're someone who's guessing. And the point is that once you have gains here, it's not house money, it's your money, it's in your account. You have to protect it as if it's the first dollar you put into your account. The Nasdaq also rallied up, and it's just shy of that volume-weighted average price anchored to the August high in here. And, same story. We've got these potential levels of resistance from this volume-weighted average price and the March 29th high and a declining 20-day moving average. The primary trend is still lower when we look at the weekly time frames. So is it possible we could turn around? Absolutely. We're not here to, we can't make money off of every possibility. We have to go with what the odds are. And the odds right now in the intermediate term are the buyers are in control. Does that mean you want to buy right here? I think if you were to see, a slight pullback like this and then buy right here, that's the buy you want to make. You don't want to buy up here before a shakeout might occur. The Russell 2000, same story. It's right up against that volume-weighted average price from the high that was made in August, a declining 20-day moving average. Looking at the weekly time frame, all these longer-term moving averages continue to decline. So it's mixed messages, and that's why when we have mixed messages, we look to shorter term time frames to trade. Here on the semiconductors, the weekly time frame, what could be possible here, and I explained this last week, it's still possible this is a higher low right here. So we had this low, this could be a higher low that leads to the market doing something like this. And then as that were to happen, these longer term moving averages would be able to flatten out and sustain a move higher. For now, we're still recovering from this sell-off. I don't know if we're going to make a new low or if we're going to do something like this. We have to take it step by step, piece by piece, and that's why as a swing trader, I really don't care if we've made a bottom. That might sound, counter to what a lot of people, obsess about, whether we've made a high or whether we've made a low. But the point is, we get paid for the moves in between. Calling a top and calling a bottom isn't really helpful at all. It only, serves to say, see, I was right. Look at how smart I was. But the biotechs, they came back down into this band of resistance. We were watching it as a potential level of support. I did not suggest you buy blindly into that, although doing so in this case would have worked this time. That's not how it typically works. Prior resistance tends to act as support. It did. The volume weighted average price from this low was right there as well. And we bounced from there. To what level? Right to the declining 200-day moving average again. So the 200-day moving average, it's the slope of the 200-day moving average that's more important than a closer or two above it. Very similar to what we talk about in the in the 15-minute time frame here in the 5-day moving average. When the 5-day moving average is declining, I don't rush out and get bullish there. I'm more bullish over here if it makes a higher high with a rising 5-day moving average. So going back to the biotechs, when we look at that, let's look at the daily time frame here. We're up against a declining 200-day moving average again. So, maybe we continue to do this, but I think it still will need to settle down and create a longer term level similar to this. We spoke about how it's the possibility of an inverted head and shoulders pattern, but what's more important is how it forms along the way. And, how can you make money trading it? Financials were higher this week, energy names. This was actually pretty picture perfect in the energy in that the way that where support was found. By that I mean on Twitter I'd posted this, I believe on Tuesday. I was pointing out the chart of oil, and that here's a weekly chart, this bigger picture, and on the inset this was a daily time frame. And I was pointing out the volume weighted average price, that's that green arrow, from the COVID low. So from the COVID low, I was saying that level was 81.75, and what ended up happening in here, you can see this is the daily chart. We came down, the low on Thursday was 81.45, and then we bounced quite significantly here. I mean, we got from 81 up to close to 87.5. So these anchored volume weighted average price levels aren't just for equities. I don't trade oil, but it came within 30 cents of identifying at least the short-term turning point in there. Apple was an interesting one this week because I've been looking at this one with subscribers saying, listen, you don't want to, here, let's back it up to the daily time frame. I had pointed out, the volume weighted average price from this low and this peak were both in this area, and we have a rising 50-day moving average. Some people like to buy in that area. Some people like to buy as it touches the 50-day moving average. Well, you'd be down, pretty good and having a few days of insecurities if you purchase there. What I was pointing out, and these drawings were actually done in advance. So what I was pointing out was that, the 5-day moving average is starting to flatten out, and what I wanted to see was a shakeout below these lows. We saw exactly that shakeout, and I said, listen, if you want to buy it here, you can set your stop underneath this level. It looks like Apple's on its way higher again. Maybe if it can pull back just a little bit on Monday and then, make a purchase right here, it looks like Apple should be headed for that 163. The thing is, if you get involved, like any other stock, any other trade, know where your stop is. An absolute worst case stop would go under here. If you think Apple is about to make its next new run for all-time highs, I think this is going to be an important level. So that's going to wrap it up for me today. If you're on YouTube, give it a like, share it, etc. Thanks for tuning in, and have a good weekend.